morning and welcome. Patriot Radio News Hour. Happy Thursday. It's such a weird week. I mean, yesterday felt like Saturday, so today should be Sunday. But no, it's Thursday. I hope you all had a fantastic 4th of July. The fireworks and the barbecue and all that stuff. Not so much for me in my household. Our kids, they bailed on us. Really, my older son is with his friends in California. They kind of turned it into a yearly 4th of July thing, and my other son, our younger son, another friend of his, they went up north, and so it was just my wife and I. And I apologize for the static. Ramon, we'll go to a cell phone here after this segment. We're still working on it. We had a great one on Tuesday, not so good today, but we got one more step to do. So hopefully, but when we get that completed, the static will be no more. But having said that, we'll switch to a cell phone after the break. The Thanksgiving for me and my wife, though, or Thanksgiving. Did I just say Thanksgiving? Listen, you miss a day, you get all screwed up. 4th of July for us, very uneventful. Most of you know that my wife has been sick for a long, long time, and depending on who you talk to, she's got Lyme disease or Epstein-Barr or chronic fatigue or blah, 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 right? And so many of you out there suffer from the same thing, the mystery that nobody can figure out. And the only thing really you can do that provides any relief at all is you have to go on an extremely, extremely strict diet. I mean, it's horrible. I'll just tell you right now, I couldn't do it, right? But my wife has, for the last several weeks, now is back on, and she knows everything. And so many of you, there was a couple of the customers actually helped move the ball forward with this than her, but she knows more about food and how to treat different things that are going on in the body, and I know a lot of you do as well. But she's back on. I mean, let's just say this: the juicer's back out, right? She can't really eat anything. So there wasn't, here we are. We've got the kids are gone, right? Hey, we can start doing stuff, and we don't have to bring anybody anywhere or pick something up or feed them or do their laundry or this or that. I mean, we're free. So we just spent pretty much a very, very quiet 4th of July holiday by ourselves, and you can't. Nothing, she can't really go out to a restaurant and eat out. I mean, I guess you order a salad. So we stayed home pretty low key. I did get out on the golf course. I will tell you that I played the best 8 holes of golf, I think, in my whole lifetime. I actually played 8 straight holes in a row at even par, and I should have been 2 under, but I 3-putted a couple of greens. The problem with that story is there's 18 holes of golf. The other 10 holes, not so good. But nonetheless, if also just on another note too, and I hate to be all doom and gloom or sad in bad news stuff, but Homer's wife Pam, she's been battling cancer. A few months ago, they thought she was cancer-free. It is back. So, a lot of you out there, if you're in your prayers, can you include my wife, include Pam as well? That would be fantastic. We would appreciate that. So that was how we did. That's what we did 4th of July. And I hope you had something a little more fun than my wife and I. But we're back at it, boy. What a great few days for gold and silver. We are waiting for the bottom. It looks like it's here right now. Silver is up right around $16. Gold's at $1,258. Gold's up 5. Silver's up 5. And here's a good part that happened. So yesterday the U.S. markets were closed. We had a big rally on Tuesday. Matter of fact, gold's up over $20 from the bottom. Silver's up, about 25 cents, 25, 30 cents from its bottom. Yesterday, all the other markets were open. And so what you don't want to have is for gold and silver to surge, and gold and silver were both up yesterday. Without it, when the U.S. market opened, we needed that to go back to where it was Tuesday. We didn't want to have what they call a gap in the chart. This morning, something very good technically happened. It did that. So gold and silver both went back, and then now they're rising again, which is exactly what we wanted to see happen. So there's no gap in the gold and silver chart. There was economic data out today. We had jobs numbers out. We got the government job numbers tomorrow. We're going to talk about that. But today's show, we're going to focus mainly on 401ks. How good have they really been? We're going to get to the bottom of what the truth really is. And I'm going to tell you, here's what's so funny. It shocked even me. And of course, I'm going to tell you a story about one of my friends. We talked about pensions. He had a pension. They switched it to a 401k. I'm going to share his story and probably the greatest ripping off of America ever being forced upon us, and yet the mainstream media is acting like it hasn't happened. What's going on with the 401k balance, and how is it going to affect us all? Patriot Radio News Hour. We'll be back right after the break. Patriot Radio News Hour. Joe Jaquin, Patriot Trading Group, gold and silver, the physical delivery of. Hopefully the quality is better now. We're on the cell phone, at least for right now. The Quest guys, they were great. They came out on Tuesday, did a whole bunch of stuff. But there's something that I've got to do internally here, and hopefully we'll have our phone guy out and have this thing wrapped up by next week. Because it is, I'm going to tell you. And I know you're like, well, your name's not Italian. Our name used to be Giaquinto. And, the old Ellis Island. And you know what, I will say this. So some idiot went and protested on the Statue of Liberty. Of course, no regard for anybody else, right? Because most people, listen, when you go to New York City, if you've never been, right, you want to go to the Statue of Liberty, you want to be able to enjoy it. And if you were there yesterday, you weren't able to because of this individual protest wanting to get rid of ICE. And they don't even know what they're talking about. When people came over from Ellis Island, or to Ellis Island, it wasn't like anybody could come and you're in and no. You got put, and I know because we went. I actually found where our great-great-grandparents came over. And it was so funny. I was able to correct some of the history that we thought. Like on my dad's side, our great-great-grandfather actually came over a little later than we thought. We thought he came in 07. He actually came in 1911. But neither here nor there. They put you into quarantine, right? And they separated. The women went here, the men went there, the kids went there, right? That kind of similar to what we do now, but everybody had to go get processed, right? And you did. And, of course, it was harder then, but you tried to do background checks. You had to bring your papers with you, right, to identify who you were. I mean, it's something where today that's not obviously what happens. But nonetheless, anyway, and I digress. I just saw it, and it angered me because I think it comes out of ignorance, and really it comes out of the media misleading and trying to change what really happened in history in Ellis Island, and we talk about that all the time. And I didn't mean to get sidetracked on that, but nonetheless, you know what? It's live radio. You never know what I'm going to say. But I was talking about, hey, I'm going to tell you. I talk with my hands, so with one of my hands tied up on the cell phone, it just seems to make it harder for me. So bear with me today. So real quick, I want to get you through the economic data that came out today. We had the ADP jobs number. That normally comes out on a Wednesday. Of course, it was 4th of July, so it came out today. it missed. In other words, less jobs created, and this was a private survey number. I don't put a lot of stock in it. Came in at 177,000. Tomorrow we'll get the government number, and I'm guessing it's going to be about the same, right? And we've been kind of in this between 150 and 200,000 for a while. And then jobless claims, that was also out. And of course, you know, my feelings on jobless claims anymore. It's almost a worthless number because so many jobs today now you can't file for unemployment. It was higher as well, higher than they expected, but it's still 231,000. So those are the two big economic data points out today. So now that we've covered that, one of the things that I found interesting is, so yesterday I was golfing with Homer, I was golfing with my buddy Rob, and after the round we were sitting there, and we're always talking about stuff, and we were getting on Rob because Rob worked for a major financial institution, and he is the he's a VP, which there's thousands and thousands of them at this company. But we were talking about his new boss, and we were just laughing because he has a new boss every year. And I was giving him a hard time. I'm like, well, Rob, why don't you just become the boss? He's like, I don't want that job. He goes, first of all, they transfer you all the time. Look at how many. He goes, and he goes, we've known each other 20 years. And I'm like, well, how many bosses do you think you had? He goes, oh, I don't know, close to 30. He goes, it's at least one, sometimes twice a year I get a new boss. And he goes, they're always moving them around. And he goes, and then you got to travel twice a week. It's mandatory. You got to go here, you got to go there. He goes, I don't want to do that. And I'm like, hey, I don't blame you. And then somehow we got talking about pensions. I don't know how we even got on it. He actually brought it up. He goes, yeah, I was, when I first started, and he's one of those guys, he's been with this company, because I asked him, hey, when could you retire? Because I know he's worked there, I think he's been there for like 30 years. It's been like his only job, right? So he's a rare animal in the world out there. And he was saying how early on he had a pension. And he goes, but they did away with that. He goes, it's not very big. He goes, I think right now I get $400 a month for the rest of my life. And he goes, but then, now I've got my 401k. And of course I said to him, what a ripoff. And I said, just think about how well you could have lived. And he said to me, he goes, well, no, it's okay. It's okay, Double, because I know. And he does. He's a very smart man. He goes, I've maxed out I put the maximum in, and I've done it every year for decades. And I said to him, I go, that's nice. I go, it is. And he goes, and I know I'm rare. That most people don't do that. And I said, but Rob, if you had a pension, you wouldn't have had to do this. Think about how much money you could be having that you don't have now, right? And think about if even if you wanted to save it, how much more you could have had. Because I go, what would your pension be right now if you still offered it? If they still had it? He goes, I don't know. $4,000, $5,000, $6,000 a month until I'm dead. And I said, exactly. And he goes, that would bankrupt the company. He goes, we had to get rid of them. And of course I said to him, come on, Rob, you're smarter than that. I said, the only reason why they had to get rid of these pensions, and isn't it coincidence that it happened wasn't it getting rid of the pensions really pick up steam in the 80s and the early 90s? What happened? We went off the gold standard in 1971, and the Federal Reserve devalued that. These corporations really figured out, hey, wait a minute, it's super expensive to offer pensions. Because you know what? We used to be able to give a $2,000 or $3,000 a year pension. That covered everything. People lived good. Now, if we had to we'd have to give them $8,000, $9,000, $10,000 a month. We can't afford that. And they replaced it with 401ks. And they are trying to convince you that this is what is going to save you. So here's what was funny is Vanguard. Most of you have heard of them. They are, I would call them probably, not probably, they're one of the elite ones, right? If you're fortunate enough to have Vanguard doing your 401k, you're pretty lucky because in all of the plans, Vanguard tends to administer larger plans. So their plans are better designed than the average, and the participants in Vanguard tend to have higher income. In other words, it is the best face possible for 401ks. Now, Vanguard, they put out a report about how 401ks are doing. In 2017, this is all according to Vanguard, the average balance was $103,900. Now, that sounds pretty good, and we know that's not great. But here's the problem. The median balance was only $26,000. The reason for the huge difference between the median and the average is due to a small number of extremely large balances. Because remember the difference. Median, you take the lowest 401k and you take the highest. Second lowest, second highest. Third lowest, third highest, till you get to the middle. The middle's only 26K. The average is 104, right? And again, this is kind of the huge disparity. Most people in America today have less than 30 grand in a 401k. Now, despite the recent uptick, and they gave a great example, 2017, right? Great year for the stock market. Matter of fact, one of the best years in memory, right? Stock market was up almost 40%. Do you know what the average, not the median, because the median probably been worth, the average return of people's 401k was 18%. And I'm going to assume that was after fees. I'm hopeful. I'm making an assumption that hopefully they did it after fees. They may not have, but 18% on a stock market gain of 40. Despite the uptick, the longer run perspective raises very troubling questions. The figure below shows average and median balances for the last 11 years. Okay? So this is before the crash. So they go all the way back before the crash. And they say, how have the balances done? They said in median terms, remember, that's the 26,000 number. In 2017, the balance is actually lower than it was in 2007. So that 26,000 number is actually worse than it was in 07. Now, they said, and listen, this was a really good report. They said, hey, we want to throw some things out there. It could reflect, notice they used the word could, reflect the expansion of auto enrollment, right? Remember Obama, they said, hey, if you're a big company, you got to offer it, right? And and the only way you can get out is you got to request to get out. Which would increase the enrollment numbers, and most of those would be smaller balances, right? That's, hey, I just started, my balance is low. They said, and the auto enrollment only starts at 3%. So, in some places we'll let you do 6, but auto enroll 3. The average balance, okay, so this is the bigger number. Okay, remember the average balance last year, 104,000. was only at 110. So 11 years later, even the best number, you only got $6,000 in 11 years. Not very, again, and I keep saying this, you remember what the 401k people, the people that created it, don't forget 2 years ago they said, this is not what it was for. This was never meant to be able for people to retire on. This was just supposed to be a supplement to the pension. This wasn't meant for this. It doesn't, and they know because they're really smart people. They're like, there's no way people can save enough. Now, they said, hey, maybe we've got an age distribution problem and this and that. So they went a step further. They said, you know what? Let's look at the people 55 to 64. So go back 11 years. These were people in the mid-40s to mid-50s. They're now in their mid-50s to their mid-60s. How did their balances do? We'll talk about that next.
This is the Phyllis Schlafly Report, a daily broadcast from Phyllis Schlafly Eagles. And we're upholding the legacy of Phyllis Schlafly, grassroots activist, author of 27 books, and articulate voice for traditional values for more than 70 years. Now, here's the president of Phyllis Schlafly Eagles, Ed Martin.
President Trump's stand against world pressure for him to continue the one-sided deal with Iran is a defining moment in world history. His announcement in May to terminate that agreement is a watershed in the fight against globalism. One small event for man, one big moment for mankind, to paraphrase Neil Armstrong's words when he landed on the moon. It's not the interaction between the United States and Iran that is so significant here, but the rejection of the world order that has reigned supreme since World War II. The wrong path of globalism will no longer be the road for our country, as President Trump wisely charts a new course in which international deals must be as fair to the United States as they are to foreign countries. Just as important is how the United States will no longer bow to pressure from Western Europe or anyone else about how we manage our foreign policy. The Trump White House has consistently shown their willingness to stand by promises even when the Western world pressures against them. Trump stuck by his promise to move our embassy to Jerusalem. The Trump administration removed us from the Trans-Pacific Partnership. They removed us from that bad Iran deal. Meanwhile, the disastrous North American Free Trade Agreement, known as NAFTA, is up for renegotiation, and Trump's rejection of globalism bodes well for the issues at stake in the renegotiation. Far from seeking to renew the deal, Trump should look to terminate as much of it as possible to make sure our interests are protected. Economically, NAFTA has been far more harmful to the American economy than the Iran deal was. Trump's criticism of the Iran deal as one-sided applies with greater force to NAFTA. The flood of illegal drugs into our country, along with illegal aliens, has been facilitated by NAFTA. The loss of manufacturing jobs to south of the border is also a result of NAFTA. NAFTA was never properly ratified as a treaty because it never had the necessary support in the U.S. Senate. The agreement should be terminated, and any replacement should only be considered under the two-thirds ratification requirement of the treaty clause, which is the provision that globalists hate the most in our Constitution.
This has been the Phyllis Schlafly Report with Ed Martin, president of Phyllis Schlafly Eagles. And we think it's time to take Washington back from the power brokers. At phyllisschlafly.com, we're organizing a grassroots movement to stand against the deep state bureaucrats who control government. For the latest strategies, go to phyllisschlafly.com. That's phyllisschlafly.com. Thanks for listening, and join us again next time for the Phyllis Schlafly Report.
Welcome back. Patriot Radio News Hour. Vanguard issues the report talking about 401k balance. Remember, this is how we're supposed to live. This is it. They looked at all of the balances. The average is only 104 grand. The median, which is the real number, let's face it, right? If you took out the top 1%, right, you're probably at the median. The median, 26,000. So they said, hey, wait a minute. You know, we've got the new auto enroll, we got this and that. Let's try to take a more fair look, right? Let's try to put the best spin possible. Let's look at the group right before retirement, 55 to 64. So 11 years ago, like I said, they'd have been in their mid-40s, mid-50s. This is your peak earnings, right? This is hopefully during this time frame, right? If you're fortunate enough, your kids finally graduate from college, right? And now you don't, and they're independent. Right? They didn't move back in, and you're right. You're hopefully going to be able to maximize all of your savings. The balances for these participants is twice as large as the overall number. However, the pattern is the exact same. In 2017, the median balance was lower than it was in 2007, which means think about what the stock market's done, right? I mean, even from then, because 07 was, it was probably, 14,000? It's 24,000 now. And they have less money. That's the number. I didn't make it up. Do the average. So the super rich guys are in there. It's up better, right? It's up $22,000 in 11 years. Even the average number, you only got $2,000 a year, right? And you know how much it costs to live. That's not going to get it done, right? Try living on $2,000 a year and see how you do. Listen, think about it. Even if your house was paid for, your cars were paid for, you had no credit card debt, you're retired with no student loan debt, you got to throw that in there. Now, you had no debt at all. Still got to pay your taxes, property taxes, right? Got to pay all that, so it can't be done. Got to eat. Got to pay the electric bill. They say that in terms of balances, there's been no progress made in terms of 401k savings. And they made a note. The guys that took the Vanguard study said, hey, by the way, Vanguard's like the best. They believe that if you actually took the study of the people that, other plans that aren't Vanguard, the numbers would be worse. But this is the best case number. And then you start thinking about all of the BS. You think about the Dow, and the rallies and the all-time highs. We're not seeing that. Even last year, think about if last year hadn't come. Balances were up 18%. Imagine what the numbers would have really looked like. So now, hey, listen, nothing you can do about that. What about the future? Now, I'm telling you, and I've been telling, not very good. And not because, I'm trying to get you to buy gold or anything. It's just math. I know what the debt's going to do. I also know we've had a ridiculous return that average says, okay, we got to balance that 40%'s got to get balanced out somehow. And it's going to get balanced out by hopefully, just years of no return. Like this year, right? This year, the Dow's done nothing, right? I'd take that versus the Dow losing 20%. But according to Morningstar this morning, for those of you that don't know Morningstar, they're the company that rates all the plans, right? They're all of them, right? They're highly, highly regarded. And they came out with the call of the day today. They said long-term outlook is not great for U.S. stocks. Our expectations at the moment is that you won't have any real return from U.S. equities over the next 10 years. And I'm going to tell you right now, I hope this guy's right. I hope he's right. Because that'll at least mean we didn't go backwards, right? I'll take 0.
So, but then you start looking at these 401, and think about these balances. Here's the funny thing about these balances is, remember, people are putting money in. Think about it. You've been putting in for 10, 11 years, and your balance, the median balance is less. Now, granted, of course, that would mean a lot of people have had to borrow against it and do things like that. I get it. But it's amazing when you think about it. Even the average balance is only up $6,000 in 11 years. People are putting more than that in over an 11-year period. People are putting way more than that in there. So when you really think about it, I don't know how it works. All as I know is it's another example of what the Federal Reserve's really been doing to your money. There's a reason. As my friend and I, Rob, we were talking about yesterday, there's a reason why all these companies had to stop giving pension. I don't blame them. They had to. Because the Federal Reserve has caused so much devaluation, it's impossible to pay that kind of money. So all of a sudden now they replace it with this 401k, and despite what the stock market does, you don't get those returns. You don't get anywhere close to it. And now Vanguard comes out today and says, hey, here's the fact. And it wasn't today. It was actually, I think that came out a Monday or Tuesday. The real numbers essentially say 11 years later, there's no more money in 401ks today than there was 11 years ago. Right? I mean, I see that in the volumes on Wall Street. You see it everywhere. And here's the thing that when you think about, even when you say, okay, wait a minute, let's just look at the older people, because that's your best case. The story's the same. We've gone nowhere. And they called this great prosperity. Don't forget that. Patriot Radio News Hour. Now that I've brightened up your day, we'll be back with a great special to help you all out. Patriot Radio News Hour. Don't touch that dial. 800-951-0592. That is our toll-free number today. I'm going to give you two different opportunities today. One in the gold, one in the silver markets. But before I do that, just remember, metals plans, which, by the way, another great way you want to subvert your 401k or create your own 401k type plan. Great way to do it is in our metals plan. 4 physical deliveries a year. The minimum is $100. There is no maximum. Simply put a credit card or debit card on file with us. You tell us the day of the month from the 1st to the 28th that you want us to charge the card and the amount, and then you get 4 physical deliveries a year. For those of you, some of you, your shipments have already gone out. The vast majority of you will be out on Monday or Tuesday. Real quick. So I will be gone from the 11th to the 17th. My buddy Glenn, the professor, Glenn Biddle, is going to be taking over. Him and Jason in Colorado are going to be doing the show. Glenn's a history savant. He's a history teacher. He is just a wealth of knowledge, and he's done some shows in Colorado. Some of you have heard him on with Jason and Brian up in Colorado. He's going to be fantastic. So I'm so excited. I think you guys are going to love him a lot. He's just got a wealth of knowledge, and he's a great, history buff, and I'm sure he's going to do some great shows while I'm gone. But we should have, our goal is to have everybody out before I leave, and we should be able to get that done. So if you're looking for those, they're coming. If you want to know more about the metals program, go out to our website. Along the top there, you'll see the metals program. Click on it. It'll give you all the details, or you give us a call here at the office, and Arlene or Wendy can walk you through it. But today so Silver Eagles, let's start there. You know my feeling on silver. You know I hate it, and yet I can't help telling you, you got to buy it. right? And I've been saying it all year, right? And of course, it makes me look dumb because silver, it's $16, $16.02 right now. But silver, in my opinion, is the most undervalued commodity maybe today. That's how strongly and I hate silver. Like when people tell me, should I buy gold or silver? I'm always, you buy gold, buy gold, buy gold, buy gold. And I still believe that, but you got to have some silver in it. I'm going to do Silver Eagle rolls for the rest of the day at $380. If you go on, you got to call because we've got a limited supply. If you go online, you'll see the $385. If you want 2018, they're $395 for 2018. You don't care what the date is, and you shouldn't care. $380 for the rest of the day on rolls of Silver Eagles. You get 20 Silver Eagles in a roll. They come in the mint tube. It's a hard white plastic tube with a green top on it. 20 1-ounce Silver Eagles in every roll. They're $380, but you have to call for that price because we have a limited supply. On the gold side, I can't do the $10 Indians anymore, so I don't have any of those left. Today I do have about 75 $10 Liberties. So remember, we are running the 10 libs at $675, and of course gold's gone, skyrocketing higher here, which was just below a $10, just above a $10 lib price. Today I've got the $10 libs at $675. So, think about it, gold's up $25 now from not 25, let's call it $22 from the bottom. Right now, gold's up a little over $5, $1,259 right now. So U.S. $10 Liberty gold pieces, these are the old ones, 1866 to 1907, $675. Rolls of Silver Eagles, $380 at 800-951-0592. You can use credit cards. We take Visa, MasterCard, Discover, American Express. There is a charge for that. $5 on Silver Eagles, an extra $5 on a credit card on Silver Eagles, an extra $10 on the gold pieces, on the $10 Liberties. If you want to put them on a credit card, 800-951-0592. Now, tomorrow's a big day. So tomorrow we're going to get the government's job data, and I'm sure it'll be a little weird because of the holiday, and so I'm not sure what to expect. My guess is we're going to get what we've been getting, somewhere between, in the government numbers, let's say somewhere between 125 to 225, somewhere in there, right, what we've been seeing. But the big deal tomorrow is the tariffs on China are supposed to go in place. Yesterday, the Chinese came out and addressed the issue. They said that China is rejecting the threats and the blackmail ahead of the U.S. tariff hike. In a dispute, companies worry could flare into a full-blown trade war. We hear this all the time. But here's what the Chinese said. If the United States goes through with the tariffs that are supposed to start tomorrow, says China will not bow to the face of threats and blackmail, nor will it be shaken into its resolve to defend global free trade. Now, that's hilarious, right? The Chinese are now saying we're the defenders of global free trade, right? Not America, China is. They said that China will not strike first. However, if the U.S. goes through, China will retaliate, and I'll give you the rest of it when we return. Final segment on this Thursday, Patriot Radio News Hour, 800-951-0592. Rolls of U.S. Silver Eagles are $380 a roll. U.S. $10 Liberties These are the half ounce. They are at $675 at 800-951-0592. I think there's two people that were waiting on some $5 libs. They were back ordered. They came in. They're on their way. Well, I know one of them is a pickup in Colorado. They should be there by the early part of next week. All of the people if you had the foxes or the polar bears, I think there was another one as well. All of those have been shipped, coming to us as well. So we'll be pretty much all caught up before I head out of town. So I'll be out of town next week, starting, I believe it's Wednesday, Thursday, Friday, and then Monday and Tuesday of the following week. The Professor Glenn Biddle is going to be stepping in with Jason. He, like I said, he's fantastic. He's right on line. I think you guys are going to love him. He's going to have a lot of great stuff for you. And it'll be nice for me to take some time off and have you guys not have to listen to repeats. So look forward to that. I think and they're not going to, not every show is got a great show like this one probably stinks, but you know what? Glenn's got a wealth of knowledge. I think you'll appreciate him. And of course, tomorrow's a big day. We got tariffs that are supposed to come in place. We've got China coming out yesterday saying, hey, we're not firing the first shot. We're the defenders of free trade. And if the U.S. adopts the taxation measure, China will be forced to fight back to defend its core interest of the country and the interest of the people. Listen, that's all we're doing, right? It's exactly what we should have been doing all along. So we'll have to see how that goes. Today, by the way, we are going to get the release of the Fed minutes. So that should be interesting. I guess really the only thing that's interesting about it will be the four guys that have been calling for less rate hikes. None of them had a vote this time. And for those of you that don't know, only 9 people get a vote at any Fed meeting. So the four guys that didn't this time, St. Louis, Chicago, Minneapolis, and Dallas Federal Reserve, none of them had votes, and they're all the ones that have been out in the news saying, hey, this isn't as great as it looks. So it'll be interesting to see what the minutes say today. If there's any sort of dovishness, we could probably see gold rally even more. But then again, gold shouldn't have been here to begin with. This was all manipulated. Same thing with silver. Rob Kirby did a great job. If you missed this, the show played Tuesday and Wednesday. If you missed that show, you got to listen to it. Rob Kirby's fantastic. He's the guy. His company delivers the tonnage, right? And he flat out said, "Hey, paper markets, they can do what they want, but let's not mistake fact from fiction. There's never been more physical demand for gold, and these guys are buying everything they can. What they don't want to do yet, right? They're still trying to buy." So they don't want to buy too much and force the price up on themselves. They buy whatever's available. And every month, they're buying everything that's available. And that was Rob Kirby. If you didn't listen to yesterday, or, like I said, the show that played Tuesday and Wednesday, go back and check it out. U.S. Silver Eagles, $380. $10 libs, $675. 800-951-0592.